Tesla stock just soared nearly 28% in 5 trading days. What's going on? Is this the real turnaround investors have been waiting for? Hey everyone, it's Ken here. Welcome back to the channel where we dive deep into everything Tesla, from stock updates to the future of autonomous tech. Over the past few days, Tesla stock has seen a sharp rally, climbing nearly 28% in just 5 trading sessions. Naturally, investors are starting to wonder, is this a sign of a true reversal or just a temporary bounce? But at the same time, there's growing concern around Tesla's Q1 delivery numbers. Analysts are slashing their forecasts, and we're seeing notable slowdowns in key markets like Europe and China. If you're holding TSLA shares right now, you're probably asking, this surge is great, but is it sustainable? In today's video, we're going to break down the latest forecasts for Tesla's Q1 performance and unpack what's really driving this stock price jump. We'll also compare bullish and bearish analyst views and think through what could be next for Tesla. Let's start with Q1 delivery forecasts for January through March 2025. Right now, the general market consensus is around 414,000 units, but many analysts have been revising their numbers downward recently. For example, FactSet now expects just 360,000 deliveries, which is even lower than last year's Q1 result of 387,000 units. Barclays is even more conservative, forecasting 350,000 deliveries, a sign that overall expectations for this quarter are pretty muted. What's driving this? We're seeing clear sales drops in both Europe and China. Plus, Tesla has temporarily paused production lines to prep for the updated Model Y. So this delivery dip isn't just about demand, it's also strategic. Now, let's talk about the stock price. Despite weak delivery expectations, Tesla shares are soaring. What's behind this disconnect? There are a few major factors. First, retail investors are buying in big. As I mentioned in a previous video, individual investors bought over $8 billion in TSLA over the past 2 weeks. That's a huge support base. Second, we're seeing political tailwinds. A Trump administration official publicly supported buying Tesla stock, and Trump himself warned that vandalizing Tesla facilities could result in up to 20 years in prison. This kind of political support has clearly boosted market sentiment. Third, there's growing excitement around Tesla's future-facing projects like Robotaxis and Optimus. Many investors are now prioritizing the long-term vision over short-term delivery figures. So, how are analysts responding? Let's break it down, starting with the bulls. George Gianarikas from Canaccord expects 362,100 deliveries for Q1. That's below consensus, but more optimistic than many. He believes the lower numbers aren't due to weak demand, but due to factory retooling and the upcoming Model Y refresh. In other words, a temporary slowdown. He also forecasts full year 2025 deliveries to hit 2.02 million units, around 12.8% growth year over year, and well above the average analyst estimate. But not everyone is optimistic. Bears are out in force. Morgan Stanley has cut its full-year delivery forecast from 1.924 million to 1.615 million. UBS is worried about potential factory shutdowns in Shanghai, and as mentioned earlier, Barclays sees Q1 deliveries at just 350,000. So right now, Tesla sentiment is clearly split. Do you focus on short-term risks, or do you lean into the long-term growth story? That's the divide we're seeing among analysts and investors. Let's take a closer look at those short-term risks, starting with Europe. Tesla's sales in Europe dropped around 50% year over year from January to February. That's a steep decline. In Germany, Registrations in February plummeted 76%. In Norway, Tesla's market share fell from 18.9% to 8.8%, and subsidy cuts are playing a big role here. In France, EV incentives dropped from 1.5 billion euros to 1 billion euros, reducing Tesla's pricing edge. There's also speculation that Elon Musk's political statements might be hurting Tesla's image in Europe. It's hard to separate politics from business, and consumer sentiment is definitely being affected. Now, let's talk China. While there were a few strong weeks for Model Y deliveries, the bigger picture isn't great. From January to February, Tesla's total China sales fell 28.7% year over year, and due to data regulations, Tesla still can't fully roll out FSD in China, limiting its value proposition there. So yes, slowing sales in Europe and China are putting real pressure on Q1 expectations. But even in this tough environment, is there still hope for Tesla's long-term future? Let's talk Robotaxis and Optimus. Tesla recently secured a new transport license in California, moving one step closer to commercial robotaxi operations. That's huge news. Analysts and fund managers are taking notice. Cathie Wood from ARK Invest recently predicted Tesla stock could hit $2,600 in 5 years, and says 90% of that valuation comes from the robotaxi business. And progress on Optimus, Tesla's humanoid robot, is accelerating too. It was just showcased at a symposium for lawmakers, showing that Tesla is serious about becoming more than just a car company. So when you evaluate Tesla stock, it's not just about Q1 delivery numbers, it's about the bigger picture. Now here's my take and a question for you. Yes, Q1 deliveries could be tough. Sales declines in Europe and China, plus political headwinds, won't be easy to reverse overnight. But the recent stock surge tells me one thing: investors are betting on the future. Robotaxis, Optimus, FSD, AI, Tesla is still at the frontier of tech and innovation. So the real question is, do you judge Tesla by its short-term numbers or by its long-term vision? What do you think? Will Tesla's Q1 results confirm the bears' predictions or lay the groundwork for future growth as the bulls suggest? Let me know in the comments. Personally, I'm also curious about Tesla's energy business. Although it hasn't been getting much attention lately, Tesla just kicked off energy operations in China, and I think we'll see growth there this year. Let's keep an eye on that in the Q1 report as well. Let's check Tesla's stock price at the end. Today, it has dropped by $16 and is currently at $271. It seems that former President Trump is planning to talk about auto tariffs, which may be influencing the market. As a result, auto-related stocks appear to be declining. Alright, that's it for today's video. If you found this breakdown helpful, please give it a thumbs up and consider subscribing. I post daily updates on all things Tesla, so if you want to stay ahead of the curve, make sure you're following the channel. Thanks for watching, and I'll see you in the next one. Let's keep enjoying the Tesla lifestyle.